Hey guys, it's Ryan with Big Dog Investing. Thank you guys for tuning into my channel. If you guys could do a couple of things for me, if you guys can go ahead and like, comment, subscribe to my channel if you guys have not done so already. Click the bell notification down below so YouTube can send you guys notifications whenever I release videos. Watch my videos all the way to the end. And if you guys could share my videos and share my channel with anyone, I'm trying to grow my channel as much as I can, and I definitely need your guys' help in doing so. Getting started today is going to be Friday, March 17th. It's in the early hours of Friday, but we did switch over time periods. So we are in Friday. So sorry for the delay. I'm actually packing right now. I'm leaving in an hour and a half. Still haven't slept yet. Um, but going to California for my bachelor party. I'm getting married next month. So if there's no videos this weekend, it's just because I'm out having fun with a couple of my buddies and my twin brother. But be sure to look for a video on Sunday night is when I get back. As well as if anything does happen though, like major, I'm gonna try my best to make a video. I'm gonna bring my laptop with me, but I'm gonna try to stick off of it as much as I can. But I do like making videos, and I'm still going to be researching what's going on in the financial markets. So if something major does play out, I'm going to be making a video hopefully on that. Getting started though, today the total market cap for all cryptocurrencies is $1,133 billion. This is a 4.82% increase on the day today. And there's a lot of reasons why I think that the price point of all cryptocurrencies is going up, that we're going to talk about in this video. It's going to be a shorter video, in my opinion. Sorry that they kind of drag on. I know I lose some of you guys a lot of the times when these videos go on for so long. So I'm going to try to stick around the 20-minute mark. But Bitcoin right now is currently trading at $26,533, Ethereum at $1,734, and XRP at 37.3 cents. Now, I do wish all the other coins right now are following Bitcoin percents wise, but right now, so far, Bitcoin is the biggest gainer in the top 10. But in the top 100, our biggest gainers, IMX is going to be up 16.8%, Stacks is going to be up 15.5%, and then Neo is going to be up 13.2%. But since we were in the green, everything else mainly is going to be in the green. We'll still have a couple outliers. But now on the day and the week, due to the price increase in Bitcoin yesterday and part of this, technically this morning, we did go up. If we look at the fear and greed index, because I need to start showing this more, we're right now at neutral at 51. Yesterday we were at a 52. And then last week we were in fear at a price point, or not price point, a target of 34. This is from a 0 to 100 scale. But we're right in the middle right now. But the reasons why I think Bitcoin's going up is because we've just been handing out money to these banks. European Central Bank tells ministers some EU banks could be vulnerable, and then I'm sure the European central banks will be bought out, kind of like how everything else has. But the ECB raises interest rates by 50 basis points. So Europe is raising their interest rates by 50 basis points. I don't see 50 basis points here in the United States. The majority of people think it's going to be 25 basis points or 0.25%, but only time is going to tell. And that's where we're going to see a drastic price increase or decrease, in my opinion. Again, I'm not a financial advisor, but after that meeting on the 22nd, that we're going to figure out if interest rates go up, the markets tend to go down. If interest rates remain the same or go down, then we see the markets start to go up. And that's where, on average, what happens. This is really interesting. Crypto YouTubers and social media influencers sued for $1 billion in class action lawsuit for promoting FTX. Now, in my opinion, I'm kind of indifferent on this. One, I'm not sponsored or anything, so I can a little bit speak on this. But a lot of these people, when they do these promotions, a lot of the times they're paid to just basically read a script. We don't, sue movie actors and stuff like that for a business that goes out when they end up making a commercial on it, or a product goes bad or doesn't go exactly how it was supposed to. The person who reads the script isn't the one that gets sued. Now, should these people have been doing this? Probably not. They, at least at some point, you got to have some integrity for yourself. So that's where I'm kind of indifferent. If you guys were promoting something that you guys knew was going to be drastically impacted by markets, and that the CEO was obviously embezzling money, then yeah, you should 100% be sued and at fault. But in my opinion, these influencers and YouTubers, and even, people like Tom Brady and stuff, are probably going to be getting sued also in this class action lawsuit. They're just reading a script. They have no clue what's actually going on at that company. Should they have done a little bit more research? Yes, but a lot of the times everyone just sees dollar signs and goes at them. U.S. Congress says Biden administration is weaponizing market chaos to kill crypto, and in my opinion, I 100% agree on this. I think that the Biden administration, as well as the majority of Congress, absolutely despises crypto because it, in turn, is going to bring down the trust in the U.S. dollar. But obviously, U.S. dollar hasn't, in my opinion, been able to be trusted due to banks going down, mismanaging money, just turning on the printers, inflation going up, handing out free money to everyone else, and the majority of people aren't seeing wage increases, the people that are actually working, but the free money is going to the people who are needing that assistance, which is totally, I'm all for it, but it needs to be assistance that's actually needed and not for those that just are choosing not to work because they'd rather sit at home and get paid more money. As well as the price of goods has gone up drastically compared to, let's say, wage increases. So, in my opinion, there's all the reasons why crypto should be going up, and that's why it is going up also, but they're trying to destroy it. So, only time's going to tell what's going to happen with regulation for cryptocurrencies. 30 billion to be deposited into First Republic by JP Morgan, Bank of America, Wells Fargo, Citi, and more. So this is just showing that, all of these banks are now just trying to collectively like save each other. But in my opinion, it's too late to be saved. First Republic should be gone. Signature Bank should be gone, and Silicon Valley Bank should be gone. In my opinion, they mismanaged funds. And is this actually real money? Are they actually giving out physical money, or just saying, "Hey, we got you. Here's a $30 billion blind trust. Do with it what you please"? And are they actually giving them money, or is this just basically just showing, hey, this money is there, but it's really not there? We can just say that we're doing this to bring confidence back in the banking institutions, and then basically just say 30 million or $30 billion just magically appeared. Because where's this money actually coming from? That's where I'm lost with, because we just keep on saying, oh, they're going to give out this much money, but are they actually doing it? And that's where a lot of the people, right now, with stocks and stuff like that, you can't trust stocks sometimes because people are putting in fake buy orders, raising up the prices. And obviously when you go to sell all of it, if those unrealized losses are there, a lot of people lose a bunch of money in the stocks because they're basically ghost stocks is what they're called. I did a video on it prior to it, so if I'm not explaining it 100%, I'm sorry, but I have already a previously video on it. U.S. banks borrowed 164.8 billion in front from the Federal Reserve over the past weekend. This is a new record, and this is what I'm talking about. Just the money, just printer, just keeps on going. And is the Federal Reserve actually again shipping out the money to these banks, or are they just basically just saying, "Hey, this is an IOU, use it as you please"? Because how much money is really truly in the Federal Reserve? They say that there is a number, but is it actually true? And then how are they actually not, printing any more money? That's just to be determined. This one was really hilarious to see. Silicon Valley Bank. This is the ex CEO who sold his shares weeks before its collapse. So he sold $3.3 million worth of shares before the bank collapsed. Is now in Hawaii, obviously vacationing, living it up lavishly right now. This is exactly what Sam Bankman-Fried did when he went to the Bahamas. In my opinion, he needs to be investigated on this. Federal Reserve says it stands ready to provide more liquidity to eligible institutions. We're going to talk about eligible institutions here in a little bit with another video. This one is really interesting. Macron has decided to trigger Article 49.3 to adopt his pension reform plan with a vote in the French National Assembly. And in my opinion, this is completely wrong. So he's a president, or whatever you want to call it, of France, but he's basically wanting to get rid or change the pension system for French citizens. We basically went away from pension plans here in the United States. Unless you work for the federal government or a city job, the majority of companies don't actually have pensions anymore because it's just too expensive. But in my opinion, pensions were really great. You could actually trust the companies, and you actually had a stake in those companies, and basically a loyalty to that company to stay there longer. They decided to get away from them because company realized that they could maximize profits and in turn pay the CEO and the owners a lot more money. So in my opinion, this is again just wanting the actual citizens of these countries to keep on working until they're dead. And this is really bad, especially this is really, really terrible for a leader to do of a country, basically uses power without a vote. And in my opinion, he deserves to actually, in my opinion, be investigated for this and possibly removal from office. This one was really interesting too. This is like this is a lawyer that is going after the FOIA and requests that the Fed, FDIC, and OCC demanding information about the unlawful debanking of crypto companies. In this lengthy thing, I'm not going to read it word for word. He basically talks about how cryptocurrency customers, as well as companies themselves, and it's mainly companies, are having their bank accounts shut down or having also a hard time opening up account at certain banks, as well as both of them combined. So, in my opinion, this is just showing that the federal government and also these institutions are basically targeting crypto companies and wanting them to fail, basically stopping the promotion or innovation here in the United States. We're supposed to have entrepreneurship here in the United States, and this is just proving that this is a grasp overreach of power, in my opinion, by the federal government as well as the banking institutions who we're supposed to trust. Obviously, we show that we can't trust them because they are actively losing our money right now and needing bailouts again. John Deaton comes out and attacks Elizabeth Warren right here because she came out and says it's no wonder the American people are skeptical of the system that holds millions of struggling student loan borrowers in limbo, but steps in overnight to ensure that billion-dollar crypto firms won't lose a dime in deposits. And in my opinion, again, this is just her blasting cryptocurrency companies. It wasn't the crypto companies that lost the money, it was the banks and the institutions themselves. So that's the thing that she needs to get straight. It wasn't Binance, it wasn't Circle, or it wasn't Coinbase or Ripple that was actually losing money, actively losing money. They just had their money in the banks. The banks are supposed to be able to be trustworthy of those funds. And it doesn't matter because I technically could have had my money in Silicon Valley Bank or Signature Bank. So she's not verbally attacking the customers themselves. It's only crypto companies and crypto customers that she's basically attacking here. But it was really the business leaders and the executives at these banks that were basically mismanaging funds, over loaning out too much money. And then when people wanted to get their money out of the banks, they were tied up in loans and they couldn't essentially get that money when customers wanted it. And that's essentially when they went insolvent, as well as the CEO, CFO, CMO selling a bunch of shares of stocks 12 days before it goes down, as well as giving executives bonuses 2 hours before the federal government takes over. So she really needs to get her facts straight before she comes at crypto companies. Stuart Alderati talks about this, what we talked about yesterday. CoinDesk brought this up and says prospective buyers of Signature Bank will reportedly have to agree to drop all crypto businesses at the bank. And then Stuart Alderati is a chief legal officer for Ripple, and he's actively doing the Ripple versus the SEC case, and says government action that has the consequences of depriving legitimate businesses their rights to bank accounts is a violation of a constitutional due process. Community Financial Services Association of America versus FDIC, Federal Reserve, OCC. And he pointed out to basically a case. And this basically is just showing right here that, again, this is a grass overreach of power that the federal government, the FDIC, is basically actively stopping whoever buys the funds or buys Signature Bank itself can no longer actively use cryptocurrency, because a cryptocurrency company or an exchange might actually have enough money to buy this bank, but they have to promise that they're not going to basically mess around with any of this and then have no ties to cryptocurrency, so basically just wanting it to fail. And there was a court case that he ended up citing that uses precedent, and now hopefully this actually does go to trial because it should not actually come out. CoinDesk also reported the $1 billion Voyager Binance deal should go ahead despite government objections. A New York court has ruled. So we're going to talk about this. And this is what it is just showing right here, what John Deaton points out. It says a New York court denied the government's request to halt the $1 billion deal, saying delaying would harm customers. The SEC was also objecting. It's up to the judge to protect customers and investors, as the SEC has abandoned their role. Because it's the SEC's job to do this, and obviously they have failed. We're going to talk about this after in just a second, and it's going to be actually right here. So James K. Filan comes out and shows right here of what the judge specifically says. In this, it was really interesting because the judge, when he got the appeal request by the SEC, the judge comes out and says, no, we're not going to actually do this. It's not my fault that you guys lost in court. you guys haven't changed anything. So he comes out and says in their appeal process, the SEC's appeal, he ends up writing to them after and says, I cited some decisions on this point when I announced my original decision in open court. And when I issued my final decision, I cited additional Second Circuit and other authorities that are directly on point. The debtors have cited many additional authorities in the memorandum they filed today. See debtors mem 14 through 17. The government contends that they will likely win on appeal, but is making its arguments that the government has not even discussed any of the authorities that I cited, or that the actual theory on which I relied on. Instead, the government's papers exaggerate and in some places mischaracterize what I have done and the authorities on which I have relied on, and in other instances rely on hyperbole or on straw man arguments. So basically, the SEC is basically just saying this judge lied in court. They're, basically against the SEC, and then wants, basically a grounds for an appeal to the higher courts, and the judge basically denied it. They can still appeal to the higher courts, but the transaction's still going to go through, and then maybe a higher court can roll it back if they want to. Fred comes out and says that page 13, 14, and 16 are also good reads. So if you guys want to read that case, it's going to be in the links below. And this one was really interesting. So for those of you guys that don't know, Jay Clayton used to work for the SEC, and he's the one that sued Ripple on the last day before he left office, and then basically left it up to Gary Gensler to basically essentially finish his job. So on this, Jay Clayton weighs in on transparency and integrity in the markets for cryptocurrency and digital perspectives. Comes out and says, wow, Jay Clayton, the guy who sues Ripple on his last day of office at the SEC, gets to tell us all on how to maintain integrity in the markets. You can't make it up, and I completely agree with this. This will be in the in the comments so you guys can watch it. It was a really just funny read, and this one was really hilarious too. So there's meetings right now that are going on. Janet Yellen is the Secretary of the Treasury, and she basically is in front of Congress right now. Basically, they're talking about how she's allowing the FDIC to overstep and basically promise that all of the money in Signature Bank and Silicon Valley Bank are 100% insured by the FDIC. Now, this guy right here, I don't know his name, but he talks about that he's from Oklahoma, I believe, in the video is what he says. But he's asking about all of the smaller banks and if the FDIC will insure all of the smaller banks. And Janet Yellen in this video says, no, unfortunately, that's not how it works. And he's like, well, please tell me how it works. So she explains that the FDIC and the majority of the Treasury, and then on her approval also, and then she corrects herself, the super majority have to agree that basically this is a great thing for the markets. And he's comes out and says, well, how am I supposed to do this and tell my constituents that, if you guys go into these smaller banks to put your guys' money, it's not 100% insured. But don't worry, if you guys don't rely on our smaller banks, go to a big bank, put all of your money there, because obviously you can trust their funds because the FDIC will back them 100%. And she's like, well, that's not what we're saying. He's like, well, that's what you're implying. And she beats around the bush about it. And I 100% agree with what he's saying. Basically, it looks like the FDIC, the federal government, and the press or the Secretary of the Treasury are all basically in cahoots with each other right now to allow people to monopolize the banking institutions and basically trust all of the big banks and letting the smaller banks fail. So this is a really great thing to watch, and this is what happens in our Congress. If you guys have never sat down for a meeting or watch one of these televised viewings, these videos right here are really great. It's only 4 minutes, and I would highly recommend you guys watch that, and you can watch her figure out how she's supposed to answer these. And this is right here. John Deaton comes out and says right here to Geneva Roach, banks are making deposits into the First Republic Bank, $5 billion each from Bank of America, Wells Fargo, Citigroup, JP Morgan. We've talked about those. $2.5 billion from Goldman Sachs, Morgan Stanley, and then $1 billion each for the rest. And then John Deaton says, and they blame shit on crypto. And I 100% agree with this. Crypto's not at fault. It's the banking institutions that are at fault. David Schwartz comes out right here, and this is where I was talking about, where you have your celebrities, influencers, and YouTubers basically getting sued. He comes out and says, if the government says to Tom Brady, you can't say crypto exchange is great, but we might fine you millions of dollars even if you did nothing wrong. Or you can say kids should drink more carbonated sugar water with no liability. What is Tom Brady going to say? And he comes out in response to this and says, why I think a promoter liability in the absence of any evidence of negligence or wrongdoing is important freedom of speech issue. And I 100% agree with this, because this is, again, he's just reading from a script. Tom Brady, Curry, everyone else, who promoted FTX was just given a script to read, and that's essentially what they did. They just read the script. We're gonna roll through though, because we're getting to we're past our 20-minute mark. But this chart just shows right here that the banking crisis is one chart. This is the Fed balance sheet jumped by 297 billion, largely the largest weekly increase since the pandemic. CZ, based from Binance, comes out and says, this is the basically to get your problems away. Have a one-to-one reserves, problem goes away. A few more crazy ideas. Don't lend out customers money to make money. Let venture capitalists do that. No reserve question mark. Charge a transparent fee for your services like facilitating transactions. And then number 5, tax costs too high. Transaction costs too high. Use blockchain tech to lower your costs. Keep business simple. And I 100% agree with this. This is a great way to solve the financial markets. And this is why I think cryptocurrency is going to be here to stay. This is right here is basically Coinbase showing that their staking services are going to stay. And if you guys want to, you guys can sign up for crypto 435 and basically just give some of your guys' own inputs. And the last thing that we're going to go over right here, I wanted to leave it on the XRP note and the Ripple note right here. Zach Rector says XRP in the number 1 spot is an inevitable, because he comes out and replies to Digital Asset Investor. The narrative that Bitcoin and Ethereum are somehow superior has been a manufactured, paid for lie, and everything at Ripple has been going through was because of the superiority of XRP, because banks want it to fail. Banks do not want Ripple to succeed and use the XRP token in the financial markets. We'll leave it there. If you guys can't invest with the big dogs, stay on the porch. I'll try to make videos this weekend, but understand I'm going to be on a bachelor party. For myself, it's my bachelor party. So, I'm going to take some time for myself. If something does happen, though, I'll try my best to make a video. Thank you guys. Have a great rest of your guys' weekend, and I will see you guys on the next video.